Paying off your home at 90. It's possible under President Trump's new plan for a 50-year mortgage. The president argues it would actually help lower monthly payments for homeowners, even though the interest would be astronomical. It comes as the White House focused on affordability after several election losses last week. But are these plans actually going to make things any cheaper? Let's bring in our business expert, Elizabeth Schulze, to kind of break it all down. I mean, we were talking about the interest rate, and then we started talking about, okay, what if we still owe money on our mortgage? We've already died. Does that go down to our kids?
Who has to pay the rest of it?
Yeah, exactly. Do we leave everything to the cat, to the dog? I mean, no, you should have heard the conversation going on with us in the control room.
It's a talker.
All right, so let's start with the 50-year mortgages. What does that mean for homeowners?
Okay, so typically when you're taking out a mortgage, the traditional benchmark time that you have to pay off that mortgage is 30 years. So I've been kind of crunching the numbers to figure out if you do a 50-year mortgage, is that going to save you money? And here's what this looks like if you look at a monthly basis.
Okay.
Your typical monthly payment on a $400,000 home loan, that's about the median priced home in the U.S. for a 50-year mortgage, $2,800. At a 30-year mortgage, this is at today's interest rates, it's about $3,000, almost $3,100. So you are saving close to $250 with this option every month.
Okay.
But as you said, you're paying this off over a lot longer time, so that means you're paying more interest. Look how much more interest, Kira, you're paying over 50 years and 30 years. $816,000 in interest versus $400,000. I mean, still a lot of interest, basically. So the argument against this is that you're ending up paying way more money to your bank. Your lenders are going to make money off this.
The banks are going to be happy. The lenders are going to be thrilled.
Exactly. That's sort of, while it might mean a little bit short-term gain, over the long term, you are making more money for your bank than you might be for yourself.
So who at the White House is talking with various banks?
We did have dinner with a couple of those CEOs.
There we go. They had a dinner, right? Interessante. All right, let's talk then about the 15-year car loans and what that would look like.
Yeah, so similar idea, right? So the same idea there is you're paying out over a longer amount of time, and it's going to lower your payments for a car. Car loans are a little bit tricky because we have seen that car prices have been so high, and that's meant that people are buying used cars, so then used car prices go up. Similar math there, though. Ultimately, if you're in debt for longer, you're going to pay more interest. Might make it shorter, might make it cheaper in the short term, maybe not in the long term.
All right. Now, the White House says Trump is still committed, apparently, to sending Americans $2,000 dividend checks, right?
Yeah.
Okay, so who's going to be getting those?
And remember how popular those stimulus checks were in the first term, those $2,000 checks. So this is an idea that's worked before. Idea is that this would help people again, and who wouldn't want to get a $2,000 check?
Right.
Did the math on this one for you, too. This is going to cost about $600 billion. The president says that the way that you would pay for this is with tariffs. Well, we know that tariffs in the best case, or the current kind of run rate, how you would expect tariffs to make money for the government, it's looking at $300 billion. So this is twice as expensive as the money to pay for them. The question becomes, where does that money come from, and is it ultimately going to come from taxpayers who are then paying more money to get that money back at some point?
Okay, still a lot of questions and a lot of interest, so as in paying interest. The end of the day, is this all cheaper for Americans in the long run?
You know, I was talking to a couple of economists before coming on here. All of them are happy that we're talking about affordability. The idea that we're talking about how do you make home prices cheaper, that's a good point. We need to be talking about that. This is a problem for so many people, as we've seen in the elections, as we've seen people just talk about in their day-to-day lives. If you want to think about how to help people with day-to-day costs, sure, those stimulus checks were one way to do that. But at the end of the day, these are longer-term problems for the economy. Housing is a problem of supply and demand. It still comes down to the fact that there are not enough affordable homes. People say a better proposal might be to look at how do you get rid of zoning restrictions, how do you give incentives to build more homes, especially for those younger buyers, those first-time home buyers. If you're thinking about overall costs, well, look, one of the problems has been tariffs. We know that those have raised prices for some goods, some groceries, and we've already heard the White House say, well, maybe we might backtrack on some of those tariffs, and that could help the affordability issue that they are now dealing with.
Okay. Well, we'll follow it. We'll see what happens.
We will follow the money, as we always do.
Yes, we do. We follow the money. Elizabeth, thank you.
Thanks,
and we
Karen.
follow you.